Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a real estate investor, advisor, and coach, as well as the founder of Streamlined Properties and the team leader of Streamlined Properties on Market, brokered by eXp Realty. Whether you are looking to start from scratch, get to the next level, or just a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
We're back for another week of Zen and the Art of Real Estate Investing. This week, before we get to our amazing guest, I'm not even going to beg you to subscribe this week. I mean, you should, but if you don't, there's not really much I could do from behind this microphone. What I want to do is remind you of two other things that we do have available. Number one, there's a PDF download available for every single episode. You can find it in the show notes. There's a link at the bottom, and there's also a link on the podcast website. Number two, and also important for you, is that there's a 10-minute clip of each show available on our YouTube channel. That's Jonathan Green, RE. You can go there and you can see a 10-minute clip of highlights from each episode. I suggest you check it out. Now, this week, our guest is Matt Faircloth. You know him from the book, Raising Private Capital. He's the co-founder of DeRosa Group. He's got a ton of amazing information for you. I can't wait for you to hear it. Let's go. This is episode 51 of Zen and the Art of Real Estate Investing with my guest, Matt Faircloth. Matt is the founder and CEO of DeRosa Group. Tagline is, and trademark, transforming lives through real estate. That is his passion. He's also a regular contributor and podcast guest and host at biggerpockets.com. He's the author of the Amazon bestseller, Raising Private Capital: How to Build Your Real Estate Empire with Other People's Money. Matt, welcome to the show.
Thank you, Jonathan. Thank you for having me here. So it's funny, brother. I've listened to so many Bigger Pockets episodes over the years, just like most of the time I do it on the treadmill or just when I'm working out or driving somewhere or whatever. And so recently, when I hosted the show, I got to do the coveted, this is the Big Pockets Podcast show, and you got that radio voice. So you got a little bit of that going on too, man. I'll put in a good word for you. You got a good radio voice that you could do that. This is the,
I told them that. I told them.
I can do that shtick, man. I was showing over 88 originally with my wife. And so when I did it, I was like, this is the Bigger Pockets Podcast show 711.
You get used to the cadence. A lot of us were introduced to real estate investing podcasts through Bigger Podcasts, and obviously still trucking now. But it's great to have you. So your real estate investing journey started in 2005, but before that, did you and your wife, did you guys have interest in real estate, or was it something that just happened then?
No, when her and I were dating, we first started dating in 2002, and he put Rich Dad Poor Dad in my hand in 2002. And so we started, I read that book, blew my mind, like, holy crap, this is amazing. And so I went out and bought the cash flow board game, and I was having my drinking buddies would just come over and start drinking at my house. It was like, I would just buy beer and pizza, and we would just sit and drink beer and pizza and eat pizza and play cash flow. And before you knew it, I was like really hooked. And so her and I started going to RIA meetings in our local backyard of Philadelphia, and just grew from there. And then I at the time, Jonathan, I was working for Ingersoll Rand, and I was one of their traveling sales reps, and I had a big commission check hit because I sold a bunch of equipment to Minute Maid orange juice. And Minute Maid, and I just didn't know what to do with all this money. I'm like, oh my goodness, this is a lot of money. At the time, it was a lot of money for mid 20 something, right? So it was just enough to do a 5% down, FHA backed, low money down homeowner rock loan, right? So it was like all that money was all I needed to close the deal on a $150,000 house. And so me and two of my drinking buddies moved into the house, and then they paid me what they were paying in rent somewhere else. They paid that rent to me. And that was enough to cover the mortgage and then some. This is what we call a house hack now, back before it had a cool name.
That was in Philly?
That was just outside of Philly in a little town hall. I'll give you $1 if you can spell it. Conshohocken, Pennsylvania.
I do know it, but I don't want to embarrass myself. I know there's an X in it, and that's as far as I'm going to go.
Yeah, but it's an SH. But yeah, it sounds like an X, right?
Damn
but
it.
Conshohocken.
I'm already losing. But it's interesting because I've talked to so many guests on the show who did house hacking before the term was there.
Yes.
And it was something that just made sense. So you did the single family house hack with roommates, which is the room hack strategy. How did that go? Try to be the like on-site landlord for your first property with friends. Sometimes it can be difficult.
It wasn't like that. They were just my buds. And then one of them would move out. And then what's funny, Jonathan, there was this website back in the day when people used to house share and everything like that. And this was one of the first websites that you could do reasonable commerce on, meaning like meeting people or whatever. And it was called roomymatch.com. Okay. And you go on roomymatch.com and it's like where you would find a roommate. Okay. And it would ask you all the wacky questions you would want to know from a roommate. Do you smoke cigarettes? What are your hours that you sleep? Do you eat breakfast? What are your eating habits? Do you have a boyfriend or girlfriend? Do you have a pet? Like all this stuff. I would list the bedrooms in my house on roomymatch.com and I would filter through the knuckleheads that the people that I was worried would murder. Like if I think they might murder me in my sleep, then maybe I don't have them. But then people that seemed reasonable and they were cool. And we would like meet somewhere and have a chat and they'd show them the room and they were totally cool. Just wanted a place to lay their head. And so for a couple of years while Liz and I were dating, that was my living arrangement. And in those couple of years, Jonathan, I got myself out of all my credit card debt, paid off all my student loans, and got myself, air quote, bad debt free at that time, which was like a phenomenal feat to be able to pull off. Then Liz and I got married and I sold off that house. And Liz and I, while we're dating, also bought some other real estate, believe it or not. Like we also bought some rentals. And those were our seeds for some cash flow from when we got married. I quit my day job at Ingersoll Rand and focused on building our real estate company, the DeRosa Group.
Yeah. And so what was fair to say Liz was more interested in real estate before you since she put the book in your hand?
Yeah, she was. She's my muse. She has all the good ideas.
Yeah, well, I mean, you guys work so well because you collaborate, and obviously Liz and Andresa have their own thing with the real estate investor platform. But it's nice to see that you guys can both do it separately and together. How is it, though, working in the same space generally as a spouse? You guys are co-founders of DeRosa Group together. How's that? Because I think a lot of investing people forget as couples, whatever kind, like you need to be on the same page. And it's hard as you get to be bigger investors, start to do syndications to really make sure that your relationship is good through all of that as well.
It is. Yeah. There's a lot of different facets that come to it. And Liz and I have been working together since before we were married. And we still work together now, but we both have our own ventures because Liz and I are both like super extroverted, chatty folks or whatever. So it doesn't work for us to be like direct, sitting right next to each other, working on projects together. But it does work for us to be moving initiatives in the same direction together. So I've partnered, DeRosa Group, our company has partnered up with InvestHer, and we've done a lot of work. We're both like board members for each other. You know what I'm saying?
Yeah.
Her and I were at InvestHer Con in Scottsdale, which was a phenomenal conference, and we spoke together on stage. Jonathan, I was the first man on an investor stage.
I saw that. Yeah, I saw that. Yeah, I saw that happening. I was like, there's a reason for this. And that's really great. That's fantastic.
So we're working on the concept of teaching folks that are married how to work with their spouse effectively. And so stay tuned because there's more to come on that.
I love that. But it's how many relationships have failed because one party is really into investing and the other thinks they're wasting money. And then you pick a bad deal and one deal goes south and there goes the nest egg for the family. So it is something you have to be on the same page about.
Yeah, it is. It is. And I mean, there's no one that I know that's a full-time investor long-term that does not have their spouse's support. Liz and I met people at the RIAs that were like, oh yeah, I wish my wife would come out or my husband, or they're just not interested in this kind. And I met women at InvestorCon whose spouses are not interested at all in real estate investing. And you feel for them because like, listen, this isn't going to work, brother or sister. Like this, you're not going to get you're not going to get much further in this business unless you've got your spouse at least as a cheerleader. You don't have to have your spouse as a coworker, but you at least need to have them believing in you, supporting you, and being okay with some of your time, maybe some of your money going into the real estate ventures.
Yeah, and okay with educated risk and reliance and the confidence on your partner that they know what they're doing. Well, so how did you and Liz start to scale up what you were doing with properties, and what led you to keep growing that?
In the beginning, this is 2005, we got married, right? So that was a whole different world, man. In 05, that was back. So we bought a duplex when we were dating and owned it into our marriage and whatnot. I bought it on a first position mortgage, and then this wacky thing that nobody ever gets anymore called a second mortgage.
Oh yeah.
On a rental property, right? So zero money. It was an 80-20 mortgage and that. So we did that kind of stuff, whatever. So we were able to scale with the money that we had and with very small, like a small $30K loan from her dad to get us started. And that. It was immediate family money that got us going. And then we were also in a time where that duplex I just mentioned, we refinanced it. In the 3 years that I owned it, I think I refinanced it twice because you could. You can refinance or restructure the debt, lower the monthly payments, maybe pull 10, 20K out and invest that in the next deal. So we were able to scale up through that kind of thing, through taking on debt and refining and reshuffle the deck a bit. We were able to scale up to 30 units and some of our own money, some immediate family's money to scale us up and that. And then the financial crisis hit and we just hunkered down for 2 years and just waited it out. All the way up until Liz, I married a very smart girl, Jonathan. Liz graduated from University of Pennsylvania. So one of her UPenn colleagues, she's like having a reconnection meeting with at an alumni cocktail, whatever. And she's talking to this guy about what her and her husband are up to, me and Liz. And she's like, we're just real estate investing. And he says the magic words, which are real estate investing. I wish I could do that too. I just don't have the time.
And the end of that is I have some money.
He's a financial planner now, right? This guy graduated not just from University of Pennsylvania. My wife is smart and she also is opportunistic. So my wife did not graduate from Wharton, the School of Business, but she took some classes there.
Yeah.
Right. So she could go get everybody's email address and phone number or whatever. So Liz made a bunch of contacts at Wharton while she was going to Penn. And so this was one of her Wharton friends, this guy. And she was like, you should talk to my husband. So I jump on a train and this guy lives in Manhattan as a financial planner.
Yeah.
Oh, all right. But he's doing what you do at 24, 25 years old as a financial planner in Manhattan. He's working his you-know-what off, right?
100 hours a week, no time for anything else.
Squeeze left and right. He had to leave our coffee meeting early because he had to scramble back to the office and whatnot. But I sat down for coffee with him and he was like, if I give you $50K, could you do something good with it and put it into real estate? And I'm like, yes, yes, I can.
Was that your first opportunity to take other people's money that wasn't family?
Yeah. That I wasn't like sharing a last name with or my wife's maiden name with. Yeah. Yeah. So that was our first investor.
Well, let me just go back one step because I think this is really helpful for new investors who don't have a lump sum of money. They often need to look to family. How did you and Liz present the scenario where the family was okay giving you guys $30K in the beginning? Did you have a property or did you have something that you could tell them, or did they just blind trust you because she's smart and you're smart and they knew that you weren't going to just toss the money into a ditch?
God bless him. Her father is this like Italiano paisan from Brooklyn. Okay. And he was trained to be so fair by his mother when she brought him up that he had lent $30K to one of her other sisters for a medical thing that they were working on. And so he went to his other two daughters and said, I got to be fair, right? So I gave them $30K, so I got to offer it to you as well, right? And so
you didn't need a pitch. Yeah.
Yeah. No, he didn't give it, loaned it to them, and he loaned it to us. We had to pay him back. And we did pay him back. So that was a loan, and he offered us the same loan because he's so like her family. If they'll buy a gift for somebody, for a family member or whatever, you'll see her and her sisters giving each other checks for $15 to pay each other back. I owe you 37 cents because you overpaid me for when we bought lunch together. So they're crazy like that. So it's so fair. It's annoying, right? But it's okay. I love them. But that fairness enabled him to come to us with the $30K. And so we said, yes, but are you okay if we invest it? We don't want the $30K. He thought it was going to be for our wedding.
You made the smart choice, though. I have 3 friends from law school who were all offered the opportunity. We're either going to buy you a house by putting the down payment or we're going to pay for your wedding. All 3 of them chose the wedding. all three of them regret it.
I know.
Take the house.
He didn't offer it on the house or whatever. He thought that we might want it for wedding money that we would pay back, or for house money or whatever. I'll loan it to you and whatever. And we were like, are you okay if we invested in real estate? And he was like, sure, do whatever you want. So we did. And there was our first deal.
Awesome. And what were you buying to get to the 30 units? Was it just a conglomeration of different small multis?
Yeah. So we bought, So I sold the duplex a year after we got married, right? After refied it twice, and then sold it a year after all that. And I took the proceeds from that, which was like $40K after I paid everybody, after everything got paid off or whatever, 40 or 50K, I think. I rolled that into a 1031 exchange and bought 4 units in Ewing, New Jersey, close to where Liz and I live. Because we moved to Jersey because she had to live there for her job. She went and got herself a good paying day job that produced a good enough income that I could quit and we could live on a reasonable salary. And we lived way below our means too. This is bad. We were living on like $3K a month, Jonathan, which was like unheard of now, but we were able to figure it out. And so lived in Jersey and we did a 1031 into 2 4 families. And these were kind of deals where, again, crazy financing. The first mortgage was this awful weapon of mass destruction called a negative amortization mortgage. You ever
Sounds terrible. I've heard of it, but I probably just stuck my head under a pillow.
It's an absolute mess. It's so glad. I don't think that it's around anymore. And if it is, please
stay away.
Do not ever get this. The way it works, Jonathan, is let's pretend that you need a full $1,000 to service just the interest on your mortgage, right? Real estate always goes up in value, doesn't it? So how about you pay me $600 a month and I'll take those $400 and put it onto the back end of your mortgage and increase your principal every month. How about I do that?
Yeah,
right?
Sounds terrible.
What a negative mortgage is. So
that's not going to work out well.
Doesn't that sound amazing?
Yeah.
I'm giving you a little explosive device.
Take it. Well, how were the tenancies in Ewing at the time? Because so you're getting your feet wet. The Ewing it still could be tough. Right. But so back then, what was it like being those newer landlords trying to manage 8 units?
It was going to go even better. We did a neg-am mortgage on the first and we put a second mortgage on it on the second. So yet again, Jonathan, we love these no money down deals because this is what people were doing these days. And we were young and spry and wanted to spread our money around. Bought these deals, didn't underwrite them very well. I didn't really budget well enough for maintenance. And these were properties built, like the vintage on these deals, they were like built in the 50s. Okay. Yeah. These are like post-World War II factory housing. Like just build them as fast as you can because we got these guys coming back from the war and we got to put them to work, right? Put America to work in the 40s and 50s. That's what it was. And people were still living in them. But they were somewhat dilapidated, like galvanized pipe and just maintenance pigs, these buildings were. Yeah. And it was workforce housing. It was okay. But I was also not very good at vetting tenants. And so we ended up with folks that were there to take advantage. And they tell you, I'll gladly pay you Tuesday for a hamburger today kind of thing, right? Yeah. So we dealt with all that. But I got my school of hard knocks, managed it all myself, did the showings myself, collected the rent myself. My wife with a master's in social work kept the books. That's got to be a great idea. Right?
Yeah, you needed her help on the other end. But it's interesting learning how to become a landlord because I think it's so much different than people think. It's weird to me that people still think like small multifamily is passive investing when managing small multifamily on your own is virtually impossible. Yeah. I grew up, I would come home in the summers and do the property management collections for my dad on rental properties. And he would just show me a list and they were all 6 months behind. I'm like, what do you want me to do with this? He's like, go collect the rent. I'm like, are you serious?
How about we just throw them all out?
Yeah, I was like, I thought this was easy. He's no, I like them.
Dude, I went there too. You get personal with the tenants and they're still humans, right? Yeah. And I learned that over the years, Jonathan. And now these folks are human beings. You got to treat them as such. They're not doors. They're not units or whatever. They're humans that live in your apartment that are paying you money to live there and to make it their homestead. Let's begin there. That said, you got to handle their work orders, process their maintenance requests, but then they have an obligation too, which is to pay you and to treat you like a human as well and not like a pushover, right? And so I just didn't do well with that, Jonathan. I got a flat tire. I would buy that. I had one tenant tell me one time that he went to mail his rent and he put it in the mail, but the stamp fell off. And so the postman brought it back to him a couple of days later. So of course, That's exactly what happened, right? Yeah. I took my dog at my homework.
Yeah. So where did you guys go from those 8 units? Did you end up deciding that the landlording part wasn't for you and decided to scale up even more over time?
So we landed a bridge loan on like a community redevelopment bridge loan that was aimed at redeveloping houses in urban environments like Trenton, New Jersey, which is where we live just
right next door to Ewing. Yeah. I'm in New Jersey. Yeah. So.
Yeah. I lived in Bordentown. That's where I lived.
Yeah. My co-host of my agent podcast lives in Bordentown right now. I was there for the Porch Fest like a couple of weeks ago.
Yeah, I miss that town in a lot of ways.
Yeah, it's great. Great place to invest, by the way. We've been looking at properties there a lot. It really has up and coming.
Liz and I never invested in Bordentown. Liz and I lived in Bordentown for 14 years, right down the street from the Hob. The Hob, the heart of Bordentown. I can see it from my front stoop.
Yeah. Awesome. Yeah, I'll tell Mallory after we get off. That's awesome.
Yeah. It's a fun town for you want to get out and get a cup of coffee and have a dozen restaurants within a block space. Yeah. That's great. Not the best town for raising kids. Yeah. And so we had young kids and we waited a little while. So we had our first kid after being married for 8 years, and then we raised him for a couple of years living there. And then when he got to school age, we were like, we really want to have a town with a great school. So heavy heart, but we had to leave Bordentown and move up to Pennsylvania and that. So anyway, where's it going?
Where'd you guys go on the journey? How did you get it scaled up? And then where did that lead you to now in terms of your investing with DeRosa Group?
We bought a few more on the block in Ewing around that. There was a whole string of 4 families. So we started buying up those 4 families as we went down the block. Like literally there's a couple across the street that was like, hey, we see you paid X for those 2 properties. Will you pay X for our property? I'm like, yeah, sure we will. So we started to buy up those, bought a few infill properties around Trenton and leased those up. And then bought, and it's a bit of a mistake at the time, but it worked out. We bought an office building in Trenton, right on South Broad, right across the street from Sacred Heart Church, which is the oldest church. That's the oldest Catholic parish in the state of New Jersey.
Wow. Okay.
Yeah, it looks like the Sistine Chapel inside. It's gorgeous. But we bought that office building across the street because at the time, if you're a New Jerseyite for a while, you remember Governor Corzine?
No, I've been back in New Jersey for 10 years, but I've been around it my whole life.
Brief story. He was the Democratic governor that was really expanding the size of the New Jersey government. And so he was leasing up office buildings for new staff for the Department of Community Affairs and for all this kind of stuff. They were expanding throughout Trenton and taking on office space and paying like really high rents. So we were in the path of progress and we bought an office building that we were hoping to lease to the state of New Jersey as they continued to expand. Governor Corzine lost his reelection bid to Chris Christie. Okay.
And there went that.
Chris Christie said, why are we spending, rightfully so for New Jersey residents, why are we spending all this money and all this office space and all this staff, whatever? So he slashed all the expansion plans and all the everything. And at the same time that happened, Jonathan, the economy crashed.
Yeah.
Right. And so now Matt and Liz Faircloth are left with this office building like, hey, where'd everybody go?
What do we do with this?
But there's nobody out. No, who wants to rent a 10,000 square foot office building now? Huh? Nobody.
But don't you feel like right now, there's tons and tons of commercial owners who are saying that exactly right now. Like I have all this commercial space and there's really no hope of it coming back.
No, and you're not going to get big leases anymore, I don't think. And
I agree.
Again, that's the only commercial space I own. You probably couldn't put wild horses could not drag me to another closing of an office building anytime soon. But what we ended up doing, which is what I think a lot of these commercial owners are going to need to do, is we ended up taking that 10,000 square foot building and carveting up into really small spaces, like micro office leases. Like, WeWork before it was WeWork. There was a Regis back in the day too. So Regis was like we modeled it after Regis's. And so we carved it up in little micro offices, like, 100 square foot here, 300 square foot there. And we ended up slowly leasing up the building on micro leases. And that ended up filling the building up and it stabilized from there.
Nice. This week's episode of Zen and the Art of Real Estate Investing is brought to you by my investor-friendly real estate team, Streamline Properties on Market, brokered by eXp Realty. I have more than 30 agents on my team, and we are investor-friendly. We work traditional buyers and sellers, but we also focus on investors. So whatever your investor needs are in the state of New Jersey, parts of Pennsylvania, parts of New York, and a small part of Nevada, we have you covered, as our goal is to figure out first what your investment needs are and then how we can help you reach them. Let's get back to the show. What eventually led you to Bigger Pockets? You've been very involved there. You obviously wrote the Raising Private Capital book, and now you're hosting sometimes when we were joking before, when David's too busy. Here comes Matt and Andrew. You guys were on one I was listening to the other day.
Make the joke like, "Hey, David left it." Like this really happens. David left the Bigger Pocket studio open and the microphone's on, so Andrew and I just snuck in to go take over the show.
Rob's at an Airbnb. How'd you get involved in Bigger Pockets? Did you find it as investors first, start working around there, and then just use that to eventually get inside?
It's fun. You would not think that this is how I would tie all the big story together, but it goes back to that office building, brother. Yeah. So that office building had an enormous, big open seminar room in the back. And so we started doing meetups there through the local RIA groups and through South Jersey Real Estate Investors, SJ RIA. And so we started the Mercer County subgroup, and that eventually turned into the Central Jersey chapter of SJ RIA. And so Liz and I had worked our way into it and putting ourselves on stage, and not to advance our brand only, but it just by a way to get our word out and by connecting with real estate investors and helping other big speakers out that we wanted to get closer to. We slowly started to expand into that space. And Liz just saw Bigger Pockets, this startup company coming out of nowhere that had a lot of forums and a blog and was just starting their podcast. She reached out to them and said, "Hey, my husband and I could write articles." And they said, "Okay, we'll interview you." And so we not interview for the podcast, we'll interview you to decide if you should write articles for us or not. So Liz and I call in, and it's one of the two people that worked at Bigger Pockets were Mindy and Brandon Turner. And so Brandon Turner, Liz and I had an interview with him on whether or not we should be article writers for them. And the whole time during the interview, Jonathan, I'm calling it Better Pockets. Right?
Nice
and I look
job.
on my phone, and my wife is just blowing me up, going, "Idiot! It's Bigger Pockets, fool! It's Bigger Pockets." But Brandon has a good sense of humor, and he's just a great human being, and so he approved us to write articles. And so for a year, Liz and I took turns writing articles, like 1,500 word articles, and people think success like that happens overnight. Oh, Matt and Liz just got lucky one day and got on the Bigger Pockets podcast. No, we got lucky that they allowed us to write articles for them. And then for a year, we ground it out. And then they had a guest cancel, and we got 12 hours notice from Mindy saying like, "Hey, we need somebody to come on the Bigger Pockets podcast. Do you guys want to do it?" And we're like, "Yes, we do."
Yeah. For years, I was just in the forums answering questions, and then I would send in the form, and then I would never hear anything. And then one day, Eric called me, "We've got a slot for you today." I'm like, "Okay, I'm ready." And then I recorded 2 right away. But yeah, have you found that you've made so many relationships through Bigger Pockets? So many of us have, but has it been the kind of a linchpin to your guys' growth, just using it and being a part of it over the years?
There's been, because I'm aligned, and I believe you are too, I'm aligned with Bigger Pockets is like the way they try and do business, and because their mindset and their mantra, which is more like prosperity mindset, okay, just give it away and understand that it'll come back to you. But don't try and throw a hook or a sales pitch, or don't be in there trying to game it and trying to run to the back of the room because I only got 3 left and it's only going to cost $10,000 or whatever.
Right.
It's an anti-guru, right? So if you're aligned with that, they can be a phenomenal partner. And because Liz and I can think back to my life before Bigger Pockets and my life after Bigger Pockets. And it's a very different thing. They produce the Investor Show. Like they're the ad sponsor for her program and they published my book, Raising Private Capital. So
yeah, absolutely.
I'm very grateful to have them as our business partner.
Yeah, it's such a resource for new investors to go through. But so when you got to writing that book, where did you come up with all of the experience in terms of other people's money? I know we talked about the first time you took someone else's money. It was in New York City. How did you guys keep going and then become experts in that area? Well,
when I wrote the book, this is all like, I wrote the book in 2018. I took that first check from that equity investor in 2011. And so for 7 years, Liz and I started to do larger and larger deals, right? So that equity investor, again, he's a financial planner, right? So what does he do? He goes and tells his clients about me, like, "Hey, I got this guy in Trenton that's like giving me a great return on my money, and he's doing a great deal, doing good work." And everything was for sale back in 2011, 12, 13. There were good deals. You just couldn't get financing because all the banks were still putting themselves back together and trying to clean up their balance sheets, right? And that was like, the world's different now, but there's money all over, but you can't find a deal. Back then, there were deals all over, but you couldn't get money. It was hard to get a bank that was willing to take you seriously or willing to come out of their caves to lend you money. And so we slowly did more and more equity deals, a lot of equity, a little bit of debt. And so we just 50K grew until the next deal was like 100K in equity. And then we went to 300K in equity. And then we went to $500,000 in equity. Before you knew it, we scaled up and up and up and up to the point where we bought a 49 unit, which caused me to have to raise $1 million. And I was still writing articles for Bigger Pockets at the time. And that produced some equity relationships, but for the most part, these were just people that I had parlayed on top of, and friends of friends and friends of friends of friends of friends or friends of our equity investors or whatever. And then the Bigger Pockets podcast happened, and that enabled us to raise equity a lot faster. But by then we had a big track record of our deals. We had 7 years worth of deals we had done. Yeah.
So, do you think what do you think are the couple most important things in terms of raising private capital from other people? There's lots of new investors who maybe they've done a few deals, so they're starting to develop a track record. I know that's important, but what are some other characteristics that people really need to show if they want to get other people's money?
Some would say track record. And I think that if you're looking to have somebody invest with you that is not a part of your immediate core, they don't have to have the same last name as you, if you know what I'm saying, but they probably should like and trust you because you're you. If you don't have a track record like that, they should just be somebody who knows who you are, knows your character, and knows you have integrity and everything like that. Once you've built a reasonable track record with either your own money or with immediate inner core people's money, right? Then you're ready to expand out and start doing maybe a little bit of marketing or maybe asking for referrals. You got to get really good at asking for referrals and stuff like that. We slowly expanded out from there. And that's what I recommend people do is once you've done a few deals, then you start broadcasting that track record. Then you can do a little bit bigger deals, maybe a little more deal flow. Then you've graduated to the point where you can really you can go find yourself a megaphone, which build your own, which we did originally with a YouTube channel. Yeah. And then Bigger Pockets after that. Or borrow somebody else's megaphone as you did, writing articles in the Bigger Pockets blog and that kind of thing, and contributing to a space that already gets a lot of eyeballs and adding value to them too. So that's the latter step. But you've got to start. People think, Jonathan, you can go to like privatemoney.com or some website that like, oh, hey, here's all the passive investors I'll ever need. It's just that it's just let me
download a list and text them. They'll for sure send me $100,000.
Oh, right. Let me go buy the accredited investor list. Nobody else has bought that list.
And just put them on a group text. Like that's what they want for sure.
They do. They love that's what accredited investors love the most is getting text messages from people
they don't know. Text that is completely BS.
Getting texted and phone called and emailed from people they don't know is something that accredited investors aspire to.
Love it.
Right?
Yeah, we all love it.
But that's not the case. That's the thing is that, and I talk about this at length in my book, that if you are looking to raise money for your deals, you likely have that money for your deals in your phone right now. And that means you got to have the courage to get a little uncomfortable and talk to the people that you normally talk about who you think should have won the last election or who you think should have won the Super Bowl or whatever you're going to talk to them about. Talk to them about that, but also mention that you're investing in real estate and you need some people to work with you on it.
Yeah. And I think we were saying track record's important, but you can have personal know, like, trust where someone's going to say, I already know you, Matt. I'm good. Here's 50. I know you're going to do fine by it. And that's just years in the business or years building relationships to make sure that you have trust across the board.
It goes as a person. To just good human condition. Just how about do right by people? Start there. If this would be real estate or whatever, just have integrity. If you hurt somebody, say you're sorry. If you're late, say you're sorry. And people learn to respect you because you're you, because of your character, and display that and just have good character. And then people will just trust you because I trust that so-and-so will do the right thing with other facets of our friendship or of our relationship. And so he certainly will do well in this real estate venture. And then you got to be an educator and teach them that they're not just gambling on you. They're getting into something that likely has some sort of collateral or has some sort of a if this, then that, and also certainly some upside and everything. So
Yeah, absolutely. So now at DeRosa Group, what are your targets in terms of assets?
We were buying multifamily until a couple other million people figured that one out too. And so
seems to be popular.
I know, right? I don't know. Why would people invest in housing? It's not like there's a housing crisis in America. Yes, there is. Housing is still something that we believe in. We believe that housing is the best way to convey the vision for our company, which is to transform lives through real estate. Yeah. We still will be in that for as long as I'm the head of the company. But we're also diversifying and getting into, we've got a debt fund that we've got off the ground. So we're investing some money in short-term real estate debt and that just for cash flow measures and that kind of thing for us and for our investors. So we're diversifying a bit. I know I'm no interest in other like self-storage or whatever. So I don't think those things are good. You got to stay focused in something. Mid-size multifamily, we've got a couple thousand units now in 4 states. And we are looking to expand that with deals that make sense. Asterisk.
Yeah. So for, say, somebody's played in the smaller multifamily space, like 10 units and below, what do you think is a number of units that somebody shouldn't go past on their first big deal? I was talking about this with Ashley and Jay of Bar Down. I just think it's interesting to know what you think in terms of what's too many units to bite off, just in terms of management, do you think, in your experience?
You got to tell me what they said first before I answer.
I'm trying to think of the number. I'm not going to tell you anyway.
Yeah, I know. It depends on the business systems you have in place, right? So if you are brand new to the real estate business and you've got a day job, so you can only put in like 5 to 10 hours a week into this business, and you don't have very much of your own capital involved or whatever, I would go as small. To be just outside your comfort zone. And so if your comfort zone is 5, go to 8. If your comfort zone, if you think is 10 units and you can write some of that check yourself and you got some of the time yourself to help manage it, then 10 is really comfortable for you, then stretch yourself a little bit. But don't, for goodness sakes, if you can afford a 10 unit and you've got a day job that's going to limit you on time, do not go out there and try and buy a 100-unit apartment building. Just don't do it.
Much.
Yeah, because you're going to end up, there's just too much to learn and everything like that. And so without like a direct mentor sitting over top of you, without like somebody that's able to inject some of their own time capital into the business, into it as well, you're going to be upside down pretty quick. Yeah. But then you can grow quickly. I'm not take somebody's $10,000 course or join their mastermind and then go and buy a 200-unit apartment building as your first gig in. That's not, again, somebody that tells you can do that is trying to sell you something.
Yeah, exactly. And there's a lot of that out there. I did want to ask you about that too. There's a lot of fake gurus. There's a lot of great people in the space, but with social media and how much it's out there, it's hard for new investors to tell. So what advice would you give them to tell who's real? I always think of it as who's coming in quick with a sales pitch, because then I know it's not for me because I'm unpitchable. But what have you found looking out at the landscape to help them?
All right. I'll send you a list of all the folks that I think are full of it. Okay. No,
I've got a list.
Yeah, the watch list, right? That's somebody called me the other day that they were looking at an operator this operator does a lot of Facebook posts about like, hey, my students, and DM me below if you'd like to learn more about it, whatever. It's heavy about my students, and you tell like, okay, man, I see what you're trying to do.
Yeah, exactly.
For more $15K for coaching and stuff like that, and it's at the end of the day, there are those that do and those that talk about doing. Right. And I would not trust a coach whose primary revenue stream is coaching.
Yeah, that's a great point.
Yeah, I would. If somebody's going to coach, and nothing, Jonathan, we do it too. Okay.
Yeah.
We do have a mentor. I work for Bigger Pockets. So we have a multifamily boot camp. We have books. We have our own mastermind programs, our own online stuff. But the primary function of my company is far and away buying and managing real estate. 100% in that. So I would be very cautious for folks that are looking at for somebody that just got in the business a year or two ago, right? And all of a sudden they're in the business for a year or two, and now they've got like a $15,000, $20,000 mastermind program. Man, I see what you're trying to do. You're trying to diversify. You're trying to shift your income to being a guru versus having the courage to get out there and just do deals.
Yeah, I'm 30 years in and still I have trouble. I'm eventually going to have some of these masterminds and stuff, but it makes me uncomfortable. I love giving stuff away for free, but also to your point, like at some point, like we have a level of expertise where it's okay to monetize because we've built up the trust over time. And we don't have to say, hey, we have all these students. People will just come to us because of the relationships or the reputation that we built by just doing what we do over the years.
Mm-hmm. Yeah. Yeah. I mean, that's what let your reputation speak for you. And because we've got a reasonable portfolio, we can reference our own deals and be like, on that deal, here's the picture. This isn't like a stock photo. See that picture of that deal? Here's the closing statement on it. Here's what we did before. Here's after. And we just did a couple months ago, Jonathan, we did a site tour of one of our properties.
Oh, that's awesome.
We allowed our students to go to the property. You only are able to do that if you own real estate, right?
Yeah, we do investor meetups. I'd like to let them go to my flips. My on-market team is always allowed to come to my flips. And I think that helps people so much because people don't look at enough real estate. They listen to a lot, they think a lot, they're in their spreadsheets a lot. But most people, especially new investors, they just don't look at enough because it's hard to find an agent who wants to work with a brand new investor. You don't know what to say, but like they need to look at real estate. You don't know what you're doing until you see like whatever 200,000 or 100,000 in Ewing is different than 100,000 in Bordentown or 100,000 like in Northern New Jersey. It all looks different.
What's funny, John, like at the end of the day, the business itself is the best teacher. There's all the masterminds and gurus and all this other stuff that you shouldn't be paying anybody 20, 30 grand to learn about real estate. Go do a deal. Go do a freaking deal for 20, 30 grand.
Exactly. That's a down payment.
Yeah. And no, I know you're not going to get to do the big, sexy 100-unit apartment building. I'm sorry to tell you that. But go buy yourself, you swallow some crow and go to a duplex and raise some money from your own network. Throw some of your money in alongside it too. And strap up and do the duplex and let those tenants kick your teeth in the first couple times and let the township show up and give you violations. And then you'll muddle your way to success. You'll figure it out and you'll learn. And that's like the best teacher of it is learning in the business. And then maybe having somebody watching your six as a guru or whatever, but for goodness sakes, take that kind of money and put it into a deal so you can learn.
Yeah, but I think if you do what you guys did, which is go to and or host or other real estate investing meetups like I do, you have those people who you don't have to pay who will come over. I used to go do site visits for investors who they were using another agent. They eventually used me, but they were like, hey, can you come? And I would come and I'm like, this deal sucks. And they're like, I'm not trying to get anything. I'm just ready. I just leave and I don't try to get their business. Eventually it transfers over. But they were getting bad advice because it's tough to really know in hot markets, and investors are excited. They're excited to invest. So they're likely to make a bad decision without good advice.
It pays to have someone who's not financially attached to the success of you doing the deal or not. Like there's something about having like a neutral party, like somebody meet at a RIA or yourself as a realtor can be like, hey man, I forbid you to buy this deal. This is absolutely terrible.
Especially important out of state too, because sometimes when you're looking out of state, everybody's in the funnel. You got an agent, you got a property management. You just need someone who can go over and just look at it. Another investor, you could meet them on Bigger Pockets and just say, hey, can you go look at this and tell me if it's correct or not?
People deep down, people want to help other people. They want to make money too. This isn't a hobby, right? You got to make money somehow or another, right? And that, but they also look. The good folks are down to just help people if they think that they'll, that you're good, and they're not going to spend that much. They're not going to spend their whole lifetime helping you out. People are willing to take a few minutes to help each other for the most part.
Yeah, absolutely. All right, Matt. So if you could give one piece of advice to new real estate investors in today's market, what would you tell them?
Go the other way. No, I'm kidding. Yeah. Go get a job.
Pause.
Yeah. No, I joke. There are many deals. And that's the thing is that find a way, if you can find a way to play in the current market, whatever the current market is, then you'll be okay. If you're going to wait for the market to change or wait for rates to come down or wait for the market to crash, because God bless, I get it. I want a nickel. Every time people
we'll be so rich.
Yeah, I really would. People have been telling me that they've been waiting for the market to crash since 2016, dude. Yeah, good luck. Keep waiting. Yeah. It's really just fear is what that is. So my advice to newer investors is to find a way to find a business plan that works in today's market, right? Yeah. And to get in and be willing to pivot that plan as the market changes. And I think you'll be fine. Don't wait for something to change. Change your plan to accommodate the market.
Yeah. No, that's great advice. I think we're looking at a market that if you watch the news, it's always impossible. Everything's going bad. But if real investors who've been in it the longest, there's nothing about that matters. It's just about what the deals look like, what areas are going up, what areas are going down, what assets are available, what the rates look like, what kind of money you're using. There's always a way to find it out.
Well, I believe in focusing on certain geographic markets too. And I can tell you what markets we're invested in, but it doesn't matter, right? Because it's not like Phoenix is any better than Austin or that Austin's any better than Chattanooga, right? It doesn't matter. It just matters that you focus. And so if you and I could find right now, and this is blasphemy, but I'll tell you, you and I could find a way to make money in San Francisco right now if we wanted to.
Definitely. Definitely.
Yeah, or in lower Manhattan.
Definitely.
Doesn't matter. You show me a market and you give me some time and some data, I will figure out a way to make money in that market.
Yeah,
right?
Completely agree.
So to my newer investors, it's don't get sucked in to Jonathan telling you that he loves Topeka, Kansas, or Matt saying that he loves Lexington, Kentucky, or whatever. Don't chase the shiny nickel because Brandon Turner's investing there, or Jonathan's investing here, or Brian Burke's investing over there. That's all good. It's good data to have, right? But you don't have to chase the people that just find a market that makes sense. It could be your own backyard. It could be.
Yeah. If you're new, it should be close to your backyard because you want to get some hands-on experience. Yeah, you just learn so much more. You make a couple mistakes, but your proximity is there to fix the mistakes. So that's
I've actually wrote an article for Bigger Pockets on this, and it's funny that it's still there. Yeah. But I wrote an article about why I would never invest any more than 30 minutes away from where I lived. I own stuff in Kentucky and North Carolina,
but over time, you develop a comfort zone for being okay and operators that in other areas.
Yeah, man. It changes, right? But in the beginning, I believe that. And it's maybe out-of-state investing works or whatever it is, but just make sure that your strategy that you develop is going to set you up to flourish in that market.
Yeah. Great stuff. Matt, where is the best place for people to get in touch with you? Is it at derosagroup.com?
Yes, sir.
And then social media, you guys, you and Liz are very active.
Yeah. We've figured out that's a good megaphone to have, is the social media one. We should all pick it up, right? So at the Matt Faircloth on Instagram, and derosagroup.com is my company website. And you can learn all kinds of cool stuff about us there. You can learn from us. You can, if you want to consider passive with us too, you can do that on our website. We've got a lot of free resources on the website too that folks can take advantage of. So just go to derosagroup.com.
Awesome, man. It was a pleasure. And also, please put in a good word with your wife, because I'm going to be in the DMs tonight because I've been watching Invest Her for a while. I love the concept. I've worked with so many female investors and I love seeing what they're doing. So
now you have to have her on the show.
That's what I'm saying. That's what I'm coming in for. I need to get her on the show. I would love it.
I will connect you. And an audience here listening, stay tuned for the future. Like if you guys are watching the video, for the Invest Her, this is a cool little speaker they gave me as a speaker. Get it? It's a speaker gift, Jonathan. You get it?
Yeah, I like it.
Yeah.
I like it.
You see what they did there, right?
Yeah.
This is their gift for speaking at their conference. I got a speaker.
And speaking of that, I will see you in October, if not before, at BPCon for sure. But thanks a lot, man. It was a pleasure to have you on the show.
Good seeing you, brother. Thank you.
Yeah. All right. That was episode 51 of Zen and the Art of Real Estate Investing with my guest, Matt Faircloth. We'll see you next week. I hope you enjoyed that episode of Zen and the Art of Real Estate Investing with me, Jonathan Green. And I just want to remind you, and this is always an uncomfortable part, I don't want you to think that I'm begging for you to like, subscribe, follow, do whatever you have to do for the podcast, leave a 5-star review. But if you like the podcast and you think it adds value in the real estate investing sphere, then just do me a personal favor. Like the podcast, follow it, share it when you can with your friends, and be so kind as to write a 5-star review if you believe it deserves a 5-star review up against what else is out there. I would really appreciate it, and I hope you keep listening.